Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, March 15th at about 3:30 p.m. Eastern. Well, Wall Street's main stock indexes fell today, with the tech-heavy NASDAQ leading losses on worries that hotter-than-expected inflation figures could decrease hopes of an early start to the Federal Reserve's rate easing cycle. 10 of the 11 major S&P 500 sectors have been trading lower today. Rate-sensitive technology stocks led the decline, and many of them were down more than 1%. Most mega-cap growth stocks were under pressure as well, with Microsoft down 2%, while NVIDIA shed 1%. And on that news, let's go on to three charts that could give us some insight into the week to come. Well, we kind of sort of knew a pullback was coming here because we've had a wonderful uptrend ever since October. Now, the first chart we're going to look at today is a daily chart of the S&P 500 SPDR, symbol SPY. As you all know, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, when I capture this chart today, you can hardly see this little guy. This is today's candle. When I captured the chart today, the SPY was sitting on its 20-day, the red line, 20-day moving average, and you can't, it's not listed over here on the right, but it was trading at $510.07. I just couldn't get this whole chart, including the October lows, to get a picture of here. So just know that right as I speak, it's trading at $510.07. with a 20-day moving average, the red line coming in at $508.68. So we've lost a little altitude today that we had earlier in the week. The SPY is still relatively near its all-time closing high back on March 12th, and that was at $516.78. And you say, well, Toni, there was another intraday high here. Why are we counting the closing high? And that is because closing prices are very important in trading. It means traders are willing to hold the SPY or whatever asset or stock it is overnight. So that's risk when you hold something overnight. And so the closing high, where everybody says, okay, we'll hold it, that's closing high of anything is pretty important. So the closing high, again, was on March 12th at $516.78. Okay, so I explained that. Now, we know that in October, earlier in 2023, we know that the SPY had been moving pretty much in a downtrend for quite some time. We know that in October it moved down to these lows at $409.21. And we know that right then was when interest rates began to fall a little bit, which is what stocks, mainly including technology stocks, we want lower interest rates for those. Since the SPY reversed in October, again around $409, it shot right up through the 200-day moving average, the black line, up through the 20-day moving average, shot up past and over the 50-day moving average, and then marched right up, for all intents and purposes, traded at quite a high premium to the 20-day moving average for a little while through November, then continued in December to pretty much use from December all the way through January. It used the 20-day moving average as its staircase and walked right up that 20-day moving average. Now, got a little bit short of breath here in January, slipped down below the 20-day to about $467. After a week or so, felt a little more energy, made a higher low. And then as earnings season came in, it got more rambunctious again, more excited, again walking up this 20-day moving average, using it pretty much as a trend line. Right here we see earnings are starting to come out. Fourth quarter earnings are starting to come out in this area here. This gap up was on the back of NVIDIA's bullish earnings. Then the SPY kept climbing up the 20-day moving average. And you can see here in the last couple of weeks that now the SPY is staying closer to the 20-day moving average. And whenever you see that, and I always use the staircase analogy, pretend that you've been running up this staircase for, say, a couple of hours now or all day, and after a while your legs are going to get tired and you're going to have to slow down. Well, it's the same way with an uptrend like this. After a while, and we've been doing this since November, December, January, February, 4 months, and halfway through the 5th month, price has been moving in an uptrend. And price moves in cycles. It doesn't move in total up constantly or down constantly. So right here we had a pullback today, some selling going on. Price fell a little bit, and we know that the 20-day moving average has been acting as its trend line. We are still okay here, but we may get the pullback that a lot of us have been expecting. Now, we do have potential support here at the 20-day moving average. As I said, that's at $508.68. There's another, there's more kind of sort of price support here at about 505. Down here we have price support at 494 from a pivot, and the 50-day moving average is currently coming in at 495. So I would say that the SPY needs to stay in order to continue higher lows and higher highs. It really does. We do want it to stay above that 50-day moving average. And of course, it will continue up a little higher. It has momentum, even if price moves down a little bit. But we want to keep an eye on that line. A lot of institutional traders use the 50-day moving average as well as a trend indicator. So in the coming week, again, I'm watching the SPY, watching that 494, not 495 level. I am bullish in the long term, but as I said last week, I'm firming up my protective stops, and I'm taking a little profits on some of my short-term trades. Our next chart today is a daily chart of the Invesco QQQ, symbol QQQ. Of course, the Qs represents the top 100 non-financial companies by market capitalization, and that index is the NASDAQ 100. Includes many of the talked about Magnificent 7 companies, including NVIDIA, AMD, Meta, Microsoft, that whole group. Now today when I captured this chart, the Qs were trading at $434.33, down from its all-time closing high back here on March 1st at $445.61. Now, we did get an all-time intraday high on March 8th right here. We got an intraday high at $448.64, but again, that closing high is the important line that we want to use. Now, since the Qs started rallying in October, just like the SPYs did when interest rates started a little lower, the Qs rallied and broke out really hard, never got below its 200-day moving average, which was bullish, and rallied on that news of interest rates starting down, and rallied hard and flew up over its 20-day moving average, 50-day moving average. As I said, the 200 was still down here, and then made some wild moves, falling. It did fall in January down to 395, just like the SPY fell, but it rallied and kept on climbing as tech stocks and AI stocks are getting so much attention right now. Kept on climbing up, then down to the 20-day to get its balance, then raising its legs higher, then back down to the 20-day. That staircase fell for a couple of days here, but then rallied hard on NVIDIA's earnings, which we talked about on the last chart. So the earnings season here really pulled the NASDAQ, the Invesco Qs up higher. And then last week I said, okay, it's starting to get a little bit, it's starting to get a little volatile here. Volatility, I said that last week. If you can see here, volatility means that the bulls and bears are fighting, that things are getting a little disorganized, and the bulls push price all the way up to the top of the day, and the bears come in and they sell it all and take it back down to the bottom, and so it gets pretty volatile here. And when you see that after a long trend, especially with volume coming in here high, you can say, all right, the bears are definitely doing a pretty good job here of keeping the pressure on price, and so they did. And today, the QQQ did fall below its 20-day moving average, and the 20 days coming in here at 437.52, just call it 438 if you want. So that's going to be resistance now. For the Qs to have to get back over, what was support will be resistance. We do have more support here at the 50-day moving average, which is coming in currently at $427.29. So again, you can, just like the SPY, it might be a good idea to raise your protective stops here, especially on tech stops for the coming week. Our last chart today is one I've been watching for some time, and we may have even traded it early on, but I do like this pattern currently. This is the Global X Lithium and Battery ETF, the LIT. It has 40 holdings in them. Many of them, it is an international ETF. Many of them you may not heard of. But again, I do like the pattern here. 40 holdings. Some of the top holdings are Albemarle Corporation, TDK Corporation, Pilbara Minerals, Eve Energy, and LG Energy Solutions. Now, you can't see it on this chart, but back here in July of 2023, the LIT did hit it hit a high and then started down, and that was at $69. You can't see it on this chart. It was in July. But you can see here, I mean, price did come down. You can see where price is turning into a downtrend here in August, September, and now it's using the 20-day moving average is a ceiling for it. It's trying to get up and over it and can't do it. And that's what happened to LIT, moving in this downtrend here from those August highs at 69, fell all the way down into December, rallied up for a little bit here to around 51, then fell back down and fell down here to the February lows right down here, February lows at $39.26. So it came down from those August highs 43%. Now that's quite a bit. Now you can see right here how volume was high as lit sold off, right back in here as well. Volume was high, tapered off a little, and came in here as sellers and bears were very bearish, came in and again took it down to this low at $39.26. Now after this February low, it decided to turn around a little bit. Volume softened a little bit, and it started to climb, and it didn't come back down. It hasn't so far tried to retest these lows here. It's moved up above the 20-day moving average, up above the 50-day, and the past couple of weeks came up here to not quite 48, but almost, back down, pulled back, rallied up in the past week, and now we've got today. It's, as I captured this chart, it was trading at $45.39, and what's coming up here is the 20-day moving average is crossing over the 50-day moving average, which is a fairly bullish sign. So traders are making up their minds here what they're going to do with the LIT. And again, it's trading at $45.39 right now. So in the coming week, so I'm not going to give it much room here, in the coming week, if the LIT remains above the 50-day moving average, and as you can see, I'm getting away from technology right now, although there's a lot of technology involved in this, but kind of going somewhere else for a little bit here. So in the coming week, if the LIT remains above its 50-day moving average, which is now coming in at $44.16, you can just call it 44 if you want to. If it stays above the 50-day moving average, I will add a small position to my trading portfolio with a firm stop down here at $43. If and when the LIT climbs above this prior pivot at 47.50 and climbs up to 47.50, I will add to my position, and of course by then I'll have a trailing stop. So you may want to keep an eye on the LIT in the coming week. Now, if you'd like to become a more successful trader, this is a great time to check out my online training programs. You can choose from 10 different programs, including our popular flagship product, 7 Steps to Successful Trading. If you'd like to learn how to swing trade, I love to swing trade. Trend trade, actually I love to trend trade too. Bottom fish and more. Check out these programs. They will show you how to elevate your trading skill set and how to increase your gains quickly and easily. Check out all of my online training courses by going to the link on this screen, or easier still, just click on the orange button below. Until next week, be careful out there. Keep green on your screen. I'm Toni Turner, and this is The Market Now.